Hello, I'm Sharon Hodgson, Dean of the Ivey Business School here at Western University. On behalf of the school and on behalf of the Lawrence National Center, welcome to this Fireside Chat. It's titled More Open for More Value, Ruminating on Reliable and Responsible Open Banking. Our guest today is Dave Forestell, Vice President in the Office of the President and CEO at Scotiabank. Dave brings with him a wealth of knowledge in the financial and banking sectors and in policy around financial institutions, both in Canada and internationally. He has previously held several senior positions in government and worked for several years overseas in both Chile and Venezuela. He is currently serving as the Vice Chair of the Alcohol and Gaming Commission of Ontario. Dave is an esteemed alumnus, obtaining both his BA and LLB from Western University. And we're pleased to say he recently joined the Advisory Council of the Lawrence National Center here at Ivey. Welcome, Dave.
Well, thanks very much. It's great to be back at Western, even just virtually.
Yeah. Well, let's get started. Over the last several years, we have been witness to the global economy that is undergoing a major digital transformation, accelerated most recently by COVID-19. Already, technological advancements have allowed digital banking services to become more accessible than ever before. In Canada, we're able to digitally access our accounts, pay bills, control our investments, and curate financial strategies from the comfort of our own homes. But more recently, the idea of open banking has dominated policy discussions within financial institutions and with central banks, both here and around the world. Maybe it's best if we just start with an explanation of what is open banking and how it differs from this digital access that we've already been able to take advantage of in places like Canada.
Sure, Sharon. So I think first, Canada has a fairly advanced digital universe for banking services. All of us can access our bank accounts, conduct trading through kind of personally directed accounts on our phone, through our laptop or home computer. And of course, there's a network of branch services and telephones, ABM network to conduct transactions. Open banking is different in that it allows a bank customer to provide permission to a third party to access their transaction data and provide that to a third party with the idea that that third party could be a bank, could be a fintech company, will provide them some kind of tool or service or advice or insight that improves their banking experience. And so without diving too deep into the technology, in Canada, the way that is facilitated largely at the moment is through something called screen scraping. So a customer provides their username and their banking password to a third party who kind of enters the banking system, provides that password and username, and then literally scrapes the screen. So takes the data available on screen and puts that into a third-party application. That's a concern that I think the banking industry and frankly fintechs have around safety and security and privacy. The other sort of technology that I think we all believe is a stronger technology for the future, something called API, Application Program Interface. And that basically provides a back-end connection that doesn't require the use of credentials or sharing to access banking services. So kind of that's it in a nutshell. And I think we'll get into this in a little bit, but there's been some policy work done on this by an advisory committee appointed by the Minister of Finance. And they've suggested calling this consumer-directed finance as opposed to open banking, I think because of some of the connotations around the concept of opening up people's bank accounts versus putting power in people's hands to direct how they conduct their financial transactions.
Why should an individual consumer or a small retailer care about open banking? So what's appealing to them about the opening up of this information and being able to access it through these APIs?
Yeah, I think there's two sides to this coin, and customers should care about both of them. On the one hand, for customers who have accounts at multiple institutions, Right now, they have to log in separately to each one to see that information, unless they're currently using an aggregation tool like Intuit as an example, or Plaid, to see their data. So, a simple example where this could become useful: if a customer persistently carries a balance on their credit card, and they're paying that at a high rate of interest, 19%, say, a financial institution could use that information and say, look, we see you're carrying an off balance at another institution credit card balance. Why don't you take a term loan with us at a much lower rate, pay off your credit card? And so that will reduce the interest exposure that customer has, and hopefully provide a better banking experience, but also, frankly, it's in their financial interest to do so. So that's a simple example of something where there'd be a good upside for a consumer through the use of data and information sharing. I think the other reason consumers ought to be concerned is, you're sharing your credentials, you're sharing your banking password with a third party to access your banking services. So, of course, that violates the user agreement with your bank, but, probably more importantly, from a customer perspective, that carries with it risk. How is that information being used? To whom is it being sold? How is it going to be protected? And so I think, those things also are really important for customers to understand before they decide to share, banking username and password.
Then it seems that there's this need for balance between the potential gains of what you described a consumer could get from open banking, but also issues of trust, security, privacy. And we know that security of data and data breaches hit the headlines of the news on a more frequent basis these days. I suspect this has made consumers more skeptical in terms of new technology and their willingness to open their data up to the risks that might be out there. But at the same time, I know it makes financial institutions even more diligent about the importance of protecting this data. So what are some of the privacy and security challenges facing open banking and its successful implementation?
Yeah, the word you use, trust, I think, is at the core of Canadians' relationship with their banks. Canadians bank because they know that the money that they deposit with their institution will be kept safe. And importantly, increasingly importantly, their data will be kept safe. It's not sold to other parties. We protect our customers' data. And so I think a couple things here. First and foremost, again, to kind of first principles, when somebody's collecting your data, when a fintech or third party is collecting your data, that's to monetize it. That is part of the business model. And so customers need to be aware of that. For what use is this intended? We have seen a number of instances of security breaches, cyber attacks. And so I think, a big part of this is going to be how equipped is the third party with whom you're deciding to share your information. How well equipped is that third party to protect its perimeter against cyber attacks? And that's, a really important question. And in the event of a breach, does that institution, does that company have the resources to respond? Meaning, can you be made whole? Do they have insurance? Do they have significant capital pools to allow you to be made whole or compensated? What is the user policy in that regard? And I guess the other part of it is just a really, from our perspective, very simple proposition. There's virtually no regulation associated with large parts of the tech sector today. And, that's allowed incredible innovation, incredible growth in this sector. And that's been very positive, of course, for shareholders, but also for customers who see, innovative products coming onto the market. In our view, if you provide financial services, you should be regulated as a financial services company, irrespective of what platform you use: telephone, digital, ABM, branch network, or of course, mobile device. Because ultimately, what these regulations exist to protect is the customer. These are consumer protection measures. They ensure things like sufficient leverage, when money is being loaned, of course, the types of information that's being shared, and at the core of it, the concept of informed consent. While there's a discomfort with sharing information, people generally opt to do it if it makes the user experience a bit more convenient. So I think we've probably all decided to share our information via Google or Facebook with a third party to make the login process or new user creation process easier. And that ultimately is data sharing. That's a form of data sharing. And so people need to understand what are the implications of that when they do it. And I think it's very easy to look at something as benign as a Facebook survey and say, okay, well, that seems relative. I'll just fill that out and it can be kind of fun. Of course, that is what led to Cambridge Analytica, where 300,000 people filled out a Facebook survey providing access to all of their friends in the network, which opened from 300,000 to potentially 87 million users. And that data was used for purposes that would not have been obvious to the user when they filled out a survey about their personality.
Okay, so you raised two things that I want to come back to in a later part of the conversation. One is about regulation and how far the regulations go, because the financial services industry is very heavily regulated. And I think where you're implying is we need to really think about, as fintech and tech get into this, what are the regulations that need to be in place there? So that will be important. The second thing that you mentioned is consumers and understanding about their rights, but also having sort of some level of literacy around a number of things. So I'm going to pick up on both of those later. But before we go there, I do want to spend a little bit of time understanding a bit about how other countries have approached this, because I think some have experimented a little bit more than Canada. And we've seen some really good lessons learned. So can you just give us a little bit on maybe, I don't know, US, UK, some of the other countries?
Sure. So I think this is really developed on almost two different tracks in around the world. One is where the customer service offering was very weak. You saw market forces disrupt the banking industry. So a good example of that in China, where some of the state banks provided little or no interest and very poor customer service. You now have two players that control 94% of the payment industry in China. So it was ripe for disruption because customers weren't happy. India, same thing. In-branch transactions were actually 75 times more expensive than mobile payments. And so you saw Google Pay move into that market and disrupt it. And we've seen examples of that in Canada, of course, where you think of a poor customer service offering and somebody comes in and disrupts the market and it proves very effective. And then the other track has been more of a regulatory approach. And we've seen that in Australia and UK, where there was some customer anger around the banking sector, and regulators said, we have to make some changes. In the UK, they adopted an open banking implementation entity. So they basically kind of set up a government agency to implement open banking in Canada in the UK, and required large banks to participate. From our perspective, that hasn't been a successful approach. It's been quite cumbersome and clunky, extremely costly to implement, and really was not done with a customer-first mentality in mind. It was done with a view of kind of pushing banks to do something, as opposed to saying, how do we best serve the customer? And in fact, this week, the UK actually announced that they are going to turn over this open banking implementation entity back to the market to run going forward. And so the US has actually been sort of a market in which you see a lot of large banks with very strong customer service offerings, JP Morgan, Bank of America, and others. And they've worked with the fintech sector and the aggregators, set up technical standards through a sort of joint governance model between financial institutions and non-financial institutions. In our view, that is ultimately going to provide the best customer experience because it's responsive to the market. It balances the needs of financial institutions, which are, principally around stability of the financial sector, with the more kind of perhaps dynamic and innovative ability of small companies to put products on the market and reach customers. So, our view is a market-led approach is ultimately the right approach for Canada.
Can you say a little bit more about the market-led approach and where we are in the policy development of this?
For sure. So all of the large banks and some of the credit unions, a number of fintech companies in Canada have signed on to FDX, which is the technical standards organization I just referred to that was started in the US by banks and fintechs and aggregators. So we believe that should be the technical standard that governs the development of financial services APIs or applications. And that's important because when you have a common technical standard, people know what to design to. So we've essentially said as banks, this is the standard that we're going to be designing to, and that allows fintech companies to partner more easily. And so we've also been participating in an open banking consultation with the advisory committee that's been appointed by the Minister of Finance, which I referred to earlier. So they've issued 2 reports now, and we expect a further report to be issued some point in the spring. And we've all participated in that. And of course, as I mentioned, our view was we think a market-led approach is the right approach. And what you're seeing at the moment is a lot of bilateral arrangements. So banks are partnering with fintechs where they think it makes sense for their customers, for our customers, with a general stated intention to increase the number of API connections that we're making with the external world. So, we'll see what happens with this open banking advisory report. We hope that they take note of what's taken place in the UK, and as well, I think, Australia has approached this from a perspective of kind of customer centricity, meaning the customer owns the data, and it's a bit agnostic as to industry. So that applies. Customer data is customer data, whether you're in a telco, a utility company, financial services, and potentially, moving into the entire consumer retail space. And our view is that as a policy matter, that makes a lot more sense. Customer data is owned by the customer, and they get to control how it's used.
So having discussed some of the key considerations and sort of how things have been evolving in other countries, I want to go back to this question of the regulatory process. You mentioned earlier about how regulation is going to play a role and whether we need to think about how we regulate these fintechs and just tech companies in general. So as we start to roll this out, what should we be thinking about on the regulatory framework for Canada?
Our constitution gives certain powers to the federal government and certain powers to the provincial government. So banks are regulated federally, commerce is largely regulated provincially. So it's not clear that at the moment the federal government has a clear regulatory oversight role for fintech companies. And what we say, the way to solve that is through contract, through a market-led approach in which willing parties enter into agreements with one another and agree to be bound by a certain set of minimum standards. And so we believe that a market-led approach in which there's clear minimum standards for data protection, privacy, security standards, and an agreement to a level playing field, meaning what is sometimes called reciprocity, in which any participant in the ecosystem agrees to share data with the customer's consent. And so I say it's called reciprocity, but it's not true reciprocity, because at the end of the day, the most important thing is always that the consent rests with the customer. So the relationship is not actually between the two parties. It's a relationship which is permissioned by a customer. A customer says, I want to share my data, and it can go from a bank to a third party or from a third party to a bank. And we think this is very important. The concept of reciprocity or a level playing field allows users, for example, a Facebook user who might want to obtain lower insurance rates, and a company has developed the ability to look at their Facebook usage and determine, this person's lower risk, higher risk, whatever. So we think that there's a lot of opportunities there for the customer to decide how he or she uses her data, and that should not just be an outward flow from banks to other financial services providers or fintech companies or big tech companies, but that ultimately it should be much more of an open data exchange controlled by the customer. I think the other thing I think will be, as I mentioned, just the sort of basic consumer protection regulations which exist for banks currently don't exist for fintech companies, currently don't exist in the kind of technology space. We think it's very important when you're dealing with something like people's personal finances, that they have full and fair information, informed consent, the ability to turn off sharing. So once you've decided you're going to permission sharing, that continues. People should have the ability to say, no, I'm no longer comfortable with that. And also a clear understanding of where that data goes. If a customer gives permission to share their data with one third party, does that third party then have the ability to sell that data to others? And what happens if the company's purchased by another company? So we think there's a lot of questions that have to be resolved, but it's not all doom and gloom. There are solutions to all of these issues, we believe, and that ultimately, the ability of customers to use to determine how they control their data is net positive and can be very good for the customer.
As you start to talk about this, it makes me think that the consumer needs to have a high degree of awareness and a high degree of understanding. And I think about some of the financial literacy challenges, the digital literacy challenges, even the legal literacy challenges that consumers, when they're permissioning this stuff. So I gotta believe that's going to be a major challenge in adopting some of these open banking applications. Do you see that? And do you see that there could be sort of this digital divide in banking getting even bigger as we roll out these policies? Because there's people who just don't understand some of these details.
Yeah, so I think it's a great question. Yes, is the short answer. I think there's a digital literacy, financial literacy issue to address. We think there's a very important role for government in providing that type of digital and financial literacy. And I think the government is taking steps in that regard, which we see as very positive. I think increasingly what you're seeing is because transactions can be authorized through mobile devices, through online, we're seeing much more that those online transactions also have to include advice. And as well that our branch network is a core part of that advice, that people now come into bank branches because they want to get advice on their financial future, on different products and services. And of course, people don't come in and ask about products. They say, I want to be able to send my kids to university in 5 years. And they talk about their aspirations, and we try and provide advice that is relevant to them. So I think that's part of the future, and this is where we believe banking and financial institutions will continue to be an incredibly important part of the financial lives of Canadians. During this recent during the pandemic, we kept 95% of our branches open across the country, and that was to serve many seniors who prefer to bank in person, small businesses who often have very specific branch needs, and just broadly Canadians who choose to bank in their branch. And so we think that there will be a digital divide. Obviously, certain customers are digital native; they opt into digital services. And that's great. And we're trying to put the best possible digital offering in their hands. And our view is ultimately we want to be able to meet our customers wherever they choose to bank, whether that's through an ABM, through a phone, in the branch, or on their laptop or mobile device. And so, we'll have a role in financial and digital literacy. We think the government has a role. And we also believe that as more and more companies enter the financial services landscape, it'll be essential to ensure that they also have that consumer protection mindset when they're reaching customers, and that if something like consent is truly informed consent with an understanding of what a customer is consenting to, how their data is being used, and so on.
I think about three different things that we've already talked about. One is the importance of the regulation around this. The second is around the policy considerations. And the third is getting the consumers up to speed in this whole literacy aspect. Are you worried at all that Canada might be falling behind other countries in terms of our competitive banking offerings because other countries have sort of moved at this a little faster? Or are we still so early in this that there's lots of opportunity?
I'm not worried that Canada is falling behind. I think countries, what you're seeing, I think, is in countries where the customer service offering was poor, they moved quicker because there was either market forces or regulatory forces that pushed that to happen. We believe the Canadian banks, speaking for Scotiabank anyway, have invested tremendously in our digital offering. And so, taking simple metrics, of course, there's lots of banking metrics people use, but, just go to the App Store, go take a look at the Android or store and look at the rating for a Scotiabank app. It stacks up to any other financial services application. So rather than waiting for this to happen to us, we've tried to be ahead of the trend. Anyone who's a customer will see, every few weeks we're rolling out new features, trying to make it easier to transact, to transfer money internationally, domestically. We're trying to keep our customers happy, keep their experiences as frictionless as possible, delight them. And so that's been our approach. And you see, in terms of sort of trust levels and satisfaction levels, Canadian banks score extremely high. And so we don't think we're behind here. We haven't seen, kind of what they call killer use cases in developed banking markets, because we think that ultimately this is an evolving trend. We're keeping up with it. We are forming partnerships with fintech companies where we think that there's a great customer service offering to be had. And certainly there's a lot of great innovation coming out of the Canadian fintech sector, and we're excited by that. So we see ourselves as part of that, and not we don't see that as a threat, but really more as an opportunity.
When you think about open banking and all the investments that the fintech or the big financial institutions have made, especially in Canada, to collect the data, curate the data, and make sure that we're giving tremendous visibility and digital capabilities to the consumers. Now you start introducing these other companies who are getting engaged in this process, and they're able to have access to the data that was originally curated by the financial institutions. Do you worry that as you hand over that data, there's this opportunity for them to woo away customers who you've been working with for many years and making big investments in, and have stood behind in good times and in bad times? How do you as an incumbent sort of think, or not you as the bank, think about these incumbents and what they could potentially do, and how do you manage through that?
Well, I think, you've hit on an important point. These are relationships built up over many years, decades, generations in some cases. You think of the agricultural sector where, there might be a very bad season, and, we stand behind those customers. And so we think that customers value those relationships and understand that, the sort of instantaneous relationship formed through downloading an app is not as strong in some cases or many cases as that formed, with their main financial institution. But also we have to win our customers' business every day. And so, this is not something we can ever take for granted. We have to provide excellent, exceptional customer service in the branch, on digital devices, provide relevant product services and offerings, make it easy for our customers to do business with us. and maintain the trust. We say one of our principles is be the most trusted bank everywhere we operate. So I think that, of course, competition ultimately makes us a better bank. And so that pushes us in a good direction. It pushes us to innovate. We're always scanning the landscape for competitive threats and opportunities. So, this will change, of course. The introduction of more and more fintech offerings will change the way people bank. And some of that will be positive and some of that will be negative. But in the long run, we think ultimately, our job is to stay ahead of those trends, to keep present with them. And ultimately to meet the customer where they want to bank, in the manner in which they want to bank. And so there's definitely a threat there. There's an opportunity, and we want to make sure that we're on the side of opportunity by staying ahead of it.
And as I start to think about the evolution of this, and maybe where we go, there's one potential outcome that could see the financial industry become more fragmented in Canada as you get new entrants into the market. But the other one could be that you get innovative financial services that are created in-house or potentially with partnering with some of these third parties that are putting together unique offerings and developing out great platforms to be able to serve consumers. Do you see an opportunity there?
Yeah, it's very interesting. I mean, if you look at the trends, and of course, the US market is a bit different than Canada. There's a multitude of banks, but some very large ones. What you're actually seeing is a consolidation rather than a fragmentation. So community banks, regional banks are shrinking, and that business is going to digital offerings and national banks. And so you're actually seeing kind of those two sides grow, the digital and the national bank. National banks being kind of a full service offering for customers, digital in some cases full service, in some cases not. Interestingly, though, I think what you also see is a lot of customers who bank with a digital bank want a full service offering. So, and of course, anyone who banks at a national bank wants a digital offering. So what we see is something kind of akin to two kind of similar offerings over time, each with different characteristics associated with them, beginning to kind of pull out ahead, I'll say. And so for us, we were not founded as a digital bank 188 years ago, but we're a digital bank today. I mean, we see ourselves, and we are, a leading digital banking provider across the footprints in which we operate. And so I think what you'll probably see more of is a commitment to a sort of digital first mentality in large national, multinational banks, but with a commitment to customers, as I say, to bank with them where they choose. And on the digital side, I think you'll increasingly see those banks beginning to build out the service offering to become a bit more full service. So that's sort of the trend that we're seeing today.
So we're getting close to the end of our conversation, and I wanted to give you a chance to talk a little bit about your institution. Can you give us even a sneak peek into some of the ways that Scotiabank is embracing digital transformation?
Sure, absolutely. So look, as I say, from our perspective, it starts with make it easy to do business with us. We think in terms of customer first. So, we're not an academic institution. We don't innovate for innovation's sake. We innovate for our customers' sake. And everything we do is in service of a better customer experience, whether that's better products, better services, more frictionless experience. So that's how we think about these things. One of the things we did many years ago to advance that journey was we opened what we call digital factories. So in market, in 5 of our markets, we have a digital factory where we have top programmers, designers, digital architects working kind of right next to each other, or now online, to provide service offerings that we can scale across our markets, but also that are going to take into account any sort of important, relevant local kind of characteristics. And that's been an incredibly successful proposition for us. So you'd find if you have a Scotiabank app on your phone today, it'll look largely the same in Mexico, Colombia, Peru, Chile, Canada. And that's because we've taken a build once, use often kind of philosophy. And just last year we won the Best Banking App in Canada award. And so we're very happy with the banking technology that we're developing. I think we've looked at reducing the cost of international transfers for our clients, and that's one of the things we've been offering. More data-rich transfers, and then as well here in Canada. And if you're a hockey fan, you'll probably have seen some of our ads for Advice Plus, where we're looking to really meet customers and talk to them about their financial goals, both digitally and in the branch network, and build sort of a goal plan that people can see progressing over time. Of course, Tangerine is a digital-first bank that is growing, very quickly, has incredible service offering, has some, higher interest rate savings accounts mixed with leading-edge technology. And then one of the unique features at Scotiabank is a leading bank in the Americas. We have this footprint across the Americas, and so some of the service offerings in LATAM markets would feel, very kind of cumbersome, I would say, to a Canadian customer. And so we've used digital technology to make a much better customer experience. So simple example, a couple of years ago, it would take 40 minutes to open an account in Colombia. Today, we can do it in 8 minutes with, the use of an iPad or phone in the branch network. Same thing with in Chile with mortgages. We were able to dramatically reduce the time to apply for and get approved for a mortgage. And that's been really a unique opportunity that we have to scale across markets. So, we're really excited about this opportunity that digital transformation offers, and we're very proud of what we're offering our customers today.
Great. Well, I'm looking forward to seeing great new things from Scotiabank. It sounds like you guys already have fantastic products and fantastic services. So it's exciting to see where we're going next. I think we've covered a lot of ground here today, Dave. I sort of put it in 3 categories. First, a great explanation of open banking and why it matters to Canadians, both businesses and consumers. Also, some lessons learned from what we've heard of what other countries have done and sort of what we can take from those as we move forward. And then last, what are the regulatory and policy considerations that we need to think about as we develop and roll out our open banking platforms? So I want to thank you a ton for being here today. And thanks to the Lawrence National Center for hosting today's event. I think it's been a great conversation. Thanks, Dave.
Thank you so much.